Hey, it's Rick for Friday, December 9th. Our risk model, which was showing a little bit more promise yesterday, after a couple of green days, reversed all of that today, and now we're back negative, which is kind of expected in this sort of a choppy market, back and forth, back and forth. So I won't belabor it too much. Here's the S&P. We sort of undid everything we got yesterday and closed right at the bottom. It was holding up all day long, about where it opened, and then in the last half hour, the selling came in pretty heavy. Volume was a bit above where it's been the last few days, which indicates some institutional distribution. So not a good sign going into next week, although we have the consumer price data coming out. I think it's Tuesday or Wednesday next week, and also the Fed announcement next Wednesday. So next week could be a bit more volatile. Somebody this morning, I can't remember where it was, one of the things I follow, was talking about the weakness in the financial institution stocks. And it reminded me, a couple of weeks ago, I don't pay much attention, as most of you know, to Canadian stocks. I don't, every now and then I look at them, but about 3 weeks ago, let me just pull up one of the bank stocks for Canada, BMO. About 3 weeks ago in one of my videos, I think it was, back in here somewhere, I'd made the mention that we got a bit of a gift here. This rise is about 15%. Yeah, from down here up to here is 17%, 15%, 16%. And I suggested that this might be a time to tighten up your stops. If maybe give this maybe 5% to come back, but if it goes back more than 5%, it could be headed right back down to the lows. It's more prevalent when you look at a weekly chart, which I have over here on the left. And certainly that's what's happened off the peak. BMO at least is down over 7%. Bank of Commerce. All the Canadian banks look pretty ugly. This one's down, almost 11%. And I think what I had suggested was putting in a trailing stop loss of 5%. So you would have got out somewhere up in here, and then avoided this kind of crap here. But I don't know how many of you did that, or how many of you still own Canadian banks, but I wouldn't give them any leash here whatsoever. If you look at the longer term charts, they're going in the wrong direction. You want to take your money out of these things and put them into charts that look more like the couple of positions that I have, where they're up near the highs. They're going in the right direction. So this one I'm in here at 48 and change, and then it's up nicely. GFS is entered on this downtrend line break here. Had a good day today, although it did sell off a bit at the end. And then Regeneron, a little disappointing. Broke out yesterday, got to a new all-time high, and then traded down all day today. So it's near my entry point. My average entry is 744. So I've now put a stop at my break-even point. So that's the same with all of these positions now. My stops are break-even. So if the shit hits the fan on Monday or Tuesday, worst I'm going to do is break even. So not a bad position to be in. I'm about 40% invested and 60% in cash. Pardon me. And somebody was asking me, like, where do I think the market's going to be like a year from now? Like, what are going to be? So let's just take a look at a couple of scenarios. So obviously the market is going to be either up from here, down from here, or it's going to go sideways. It can only do one of those three things. So let's just take a look at the longer term chart and spread this one out here a bit. This is the weekly of the S&P. And we've been in this downtrend. Remember, this is every time we get up to this top of this downtrend line here, we seem to roll over and come back down, and then it comes back down in here. So there's three possible scenarios for. So what I did, this line here represents January the 1st to 2024. So it's a year out. So where are we likely to be, or where could we be? And nobody knows. If I knew the answer to that, I'd be a trillionaire. But the point is, we should have a plan for every one of the available scenarios. So one is that we hold this around here and we magically just go back up something like that. And so by the end of next year, we've recovered everything we've lost in this period of time, in this past year. That's one scenario. What concerns me a little bit is notice on these rises back here and in here and in here, how tight these weekly bars are, the weekly range. It's only when you get into these downtrends where the bars get really wide. And here it's nice and orderly going up. And then we get some whipsaw action, and then it gets orderly again. And then now we've been in this whipsaw action now for basically the whole year, or a little bit more than a year. So this needs to settle down. The volatility is just way too much. But anyway, back to my point here. Let's say this is one scenario that we go back up in here. That'd be great. That'd be fantastic. I'm going to make the assumption that most of you are, if not 100% cash, are pretty close to being that. So you're going to have lots of opportunities to get invested and get a decent return throughout 2023 in this scenario. Myself, I have I've been generating a watch list of, it's currently at 360 names of basically the strongest stocks out of the 9,000 or 10,000 in the universe that I look at. So out of that 360 stocks, more than a handful are going to have really good moves in this scenario if we go up. And so I want to be in a position to be able to capture those. So if this scenario happens, I expect I would do extremely well in 2023. Another scenario is that we do something like this. We're here today and we go, it's not going to go in a straight line, but let's say we go down here and then we come back up again. We just follow this pattern or this trend lines. And, the market does something like this. That's pretty shitty. The move from where we are today to down here is another 38% decline. So it's entirely possible. So the point being here is, do you personally, or you and your advisor, have a plan that if this scenario starts drawing out, that you're protected? I know for myself, since this point up in here in January of last year to here, my accounts combined are down 10%. So the market as a whole is down we're currently down 18%. And at one point we were down 27%. So I can tell you that if this scenario happens next year, I sure as hell am not going to go down another 10%. I'm going to be so ultra cautious and in cash much more than I have been this past year. And yeah, I'll be down. In this scenario, if the market's down 40%, I'll be really annoyed with myself if I'm down any more than 5 or 6% again next year. And so my plan is designed accordingly, and I suggest that you guys And gals should be doing the same. You should have a talk with your advisor and have a plan for what if this crap happens. Now, more likely, what the third scenario I would draw would be that we stabilize here. We don't come down. We're going to come down a bit, but we're going to be in a trading range into sort of this box here. That would be a more likely than not scenario. So we're still not getting back to the January 22 highs, but we don't take out the lows that were set last in October, and we just trade in this range. And this is the worst kind of market of all, because this is really easy to make money. This is really easy to not lose money, you just stay in cash. But when you get into a market like this, into a range, you can get chopped to death. So I really don't want this to happen, but I suspect that of the three probabilities, this is the most likely probability. So again, you can protect yourself by being extremely selective, only being in top stocks for relatively short periods of time. And when prices start going below the 200-day or 50-day moving average on a weekly, 50-week moving average, that you're in cash. So it's harder to plan in this environment, but nevertheless, you still must have a plan of when you're going to be invested. And most times you're only going to be partially invested. And if we're going to trade in this kind of a range, and that range from top to bottom would be, let's see, it's still a 17% range. So it's entirely probable you could make money in that kind of environment with a 17% range, but you have to be highly selective and you have to be extremely disciplined and be in cash at the right time. So that's my prognosis for where I think 2023 is going to shake out. I think that's about all I really wanted to cover for this weekend. I mean, somebody else said, where's the market going to be 10 years from now? And crap, if I knew that, again, I would be a trillionaire. And I just hope I'm around in 10 years' time to figure out where it's going to be. But that's another story. Okay, have a good weekend, everybody, and keep your powder dry. Things are going to get better, maybe, hopefully. But if they are, you're going to be ready for it. Cheers.